Micron has big news. They just said that their business is doing fantastic. We'll talk about that. We'll also talk about Nvda earnings, which crushed it. I actually just added my first shares of Nvda, and I'll explain kind of what I'm doing because I've mentioned in the past that Nvda, AMD, some of these pure plays are not my bag, basically because I would rather invest in something like Google and Amazon, which I've done. And then if we start to see a slowdown in chip production, these companies won't be as affected, but they'll still massively benefit if we do see more chip production and more AI use. So a little bit less pure play, but also fantastic businesses that will definitely benefit from AI. We'll also be talking about some other companies that you may be interested in. Quantum stocks. We'll be talking about Meta. We'll be talking about a company that's crashing today after good earnings. Let's talk about all that. If you don't mind, hit subscribe so you can see future videos just like this one. Also, hit the like button. I appreciate that. Now, as we can see, the market is just opening now. It's 0.5% down. After Nvda earnings, everyone was a little bit cautious going into them. But before we talk about Nvda, we should take a look at Intuit. Intuit had earnings yesterday. They're down 20%. Keep in mind, they are down from $800, $807 at the end of July. This kind of seems like the top for a lot of software companies. A lot of them fell right at the end of July, and now it's down to $300. So it's down over 60%. Has their business deteriorated in that time? No, they actually had a nice earnings print. Yesterday they had their earnings go up. You know, we saw growth of 10% or so. We saw them beat on net income and on revenue. We saw that they're doing a great guidance moving forward. They're still raising their dividends every single year. They're buying back shares. They're highly profitable. And now they're at a forward PE of 12. They're down 20% today. They're even laying off workers, 17% of their workforce. So they're going to become even more profitable. But some people might be worried that, hey, are they doing this because they just don't have a need for workers? They're a software company. So is it like, hey, they're not having to do that much anymore. They're getting their lunch eaten by AI, so they're firing workers. But that's where you come down to the revenue numbers and the net income and their guidance, and they still look quite good. So right now, AI is not eating software's lunch, but people are pricing it in that it will happen, which maybe if you don't think that's going to happen, gives you a good opportunity. I haven't dove into the software space. There's one software company that I own, but that's it, and it's a small position. Now, Meta continues to get hit too. I mean, I guess not hit because it's not going down day after day, but they're stuck right around $600. I mean, this is a company too that's growing at 30% top line revenue growth over the last year. Net income exploding up. They're paying a dividend. They're making so much cash, and yet it's trading at a 24 price to earnings, so less than the general market. They announced that they're cutting 10% of their workforce, which means that they're going to become even more profitable. So I added some shares to my Meta position here today. Nvda, though, is the talk of the town. Nvda had earnings yesterday, and they crushed it. They beat on revenue. They beat on earnings per share. They beat on free cash flow. They beat on guidance. They beat on everything. I mean, this is a company who is projecting $92 billion for next quarter. If they beat that by 2%, they're going to be growing 100% in terms of revenue growth from $47 billion to $94 billion. That's incredible. That's crazy. And some people are bearish saying, they 25x the dividend. That means that they have nowhere to put their money. If they're just going to raise the dividend, that means that they're done. They can't reinvest in themselves. They can't find any good place to put it. Keep in mind, this is only going to be a tenth of their free cash flow this year. Even raising it up to 0.5% dividend yield, it's nothing for them because they're making so much money. I mean, they're buying back shares, they're paying dividends, they're reinvesting in themselves, and they still are building up cash. And they're expected, if their revenue is going to go up 100% over the last year, their free cash flow is doing much more than that. They were at $50 billion in free cash flow just this quarter, and they're still expected to grow the next year significantly. So this company had great earnings. They just got cheaper. On the trailing 12 months, they were at 45. Now they're at a 34. That's how it works. And yeah, they just continue to create shock and awe in the market. But they're not being priced like that because people don't know if the demand will continue. However, there is something that came out that I think indicates that the demand is going to continue. Anthropic is in talks to use Microsoft's AI chips, which Microsoft, we never hear about their AI chips. Microsoft actually pumped up on this news, then has fallen down since the market opened. But like, no one talks about Microsoft's AI chips. We talk about Google's and Amazon's after we talk about AMD's and Nvida's. So the fact that they're going to Microsoft to get chips, it's either because they want some deal for the cloud business, like they want better rates or something, and it's kind of a backroom deal, like, hey, we'll buy your AI chips, we'll help in that way, but then you give us better deals. Or it could be just literally they can't get enough chips. Either way, I think it's pretty beneficial to the AI market to see that. Now, let's look at this. Anthropic, just in general, is continuing to grow very quickly. $10.9 billion in Q2 2026. That's what they're projected. They're projected to double their revenue. They've seen just insane growth. They're actually showing a profit too, which is great for a company growing this quickly. It's still a small amount of profit compared to the market cap, but still is a positive thing. People like to see that a company can actually show a profit. And if they're growing revenue by 100%, even if they just do that for a little bit longer, they could turn on profitability and make a lot more money. So Anthropic is going to IPO. OpenAI is going to IPO. We also know that SpaceX is going to IPO soon, it sounds like. They're going to be a couple $1 trillion in market cap. I'm curious where all this liquidity is going to come from, but we'll be on the lookout for that. Now, I guess we have to talk about MU. We also have to talk about quantum stocks. MU said at the JPM's Boston conference that demand continues to grow and is still outpacing both Micron's and the industry's ability to supply because of persistent structural factors. Management emphasized that that cost is a religion. The balance sheet has never been stronger, and the company remains focused on meeting customer demand with high-quality products. Micron also said strategic customer agreements are helping improve planning and visibility. So they've been doing 3-year agreements. Now it sounds like they're even doing 5-year agreements, which definitely helps them in the future because people are really worried that their net income will actually go down in a couple of years. The company added that its financial outlook has strengthened since the last earnings call. And keep in mind, this is selling at a 7.5 PE moving forward. So the fact that they're giving this reiteration that things are really good, I think will help MU stock over the next month. Just like a little nudge. Yeah, we're still doing quite well. Keep in mind, their earnings are about 1 month away. Now, quantum stocks are jumping today because the administration just awarded $2 billion. So IBM stock and shares of other quantum companies are jumping after the U.S. Commerce Department announced $2 billion in grants to advance the technology. The deals are with 9 companies and apparently include equity stakes. So kind of interesting. There's a grant to it, but then also an equity stake. IBM will receive $1 billion as part of the funding, which comes from the 2022 CHIPS and Science Act. So this is the largest company receiving anything. And then there are some other quantum companies like D-Wave, Rigetti, Inflection, and also Global Foundries will receive $375 million. The government will receive a minority stake in each of these companies as part of the deals, according to the report. So not exactly sure what that looks like, but I guess that's good for the U.S. The strategic quantum technology and investments will build on our domestic industry, creating thousands of high-paying American jobs while advancing American quantum capabilities, according to Howard Lutnick. Yeah, so this obviously is helping these stocks here today. It makes sense when the government's taken equity stakes in companies in the past year or two. They've done quite well. So these quantum companies continue to do well, and they've, I broke down one of them recently. People have been calling IONQ a generational opportunity, the next Nvda. And while it's possible, I just think this is pretty expensive right now. I mean, you look at their revenue, and this is an unprofitable company. It continues to show that's unprofitable, and they have to raise cash by selling shares. I also think that there are going to be better quantum plays, like just the large tech companies. When you look at it, like, this is a $20 billion company that's not even profitable. How are they going to compete with Google, Amazon, Microsoft, Tesla, like these other major tech companies? Now, not all of them are focusing on quantum, but some of them are. Google's definitely focusing on quantum, and they are they can throw billions of dollars a quarter if they want, tens of billions of dollars a quarter if they really wanted to, at quantum, which they're not going to do, but they could do that. So IonQ up today on the news of all the quantum stocks. I don't even know if this was one of the companies that was going to work, because they didn't really lay out all of the 9 companies. But yeah, the fact is these companies aren't profitable right now, so they're not interesting to me yet. I'd rather buy the Googles and Amazons of the world. So Google and Amazon are my 2 largest positions. They continue to continue to grow quickly as well. But yeah, they're growing nothing compared to Nvda. I mean, these are pretty mature companies, and they're growing at 15% a year, very consistently, right? Very profitable companies. Net income continues to go up constantly. These are, I think, much safer than some of the AI stocks, the pure plays, but they have AI exposure as well. Google up a lot recently, Amazon up a lot over the last month or so. You can compare that to something like Meta. Meta is just much cheaper. I think people view it as riskier, less of a moat than Google and Amazon as well. But I did add to Meta today. I added maybe 1% to my position, just kind of a dollar cost average, but around these prices, it's quite attractive. Meta is one of my largest holdings as well, behind Amazon and Google. Nvda, I added a very, very small star position. I have a portfolio that is full of dividend stocks that I just add to every single week. I've been adding to between $100 and $200 for the last 6 years. And I've done really well because my largest holding was Google going into last year, and it's up over 100%. So that portfolio has done really well. I think I've contributed around $50,000, and I just have it on a drip. Every single week I have a deposit in there. No matter how I feel about the market, I always buy something. So I put in around $50,000. It's worth about $80,000. Over a 6-year time period, pretty good. And keep in mind that part of that money, like the midpoint of that money, was like 3 years ago, right? So that's why it's not up 100% or more, because some of it, yes, I bought 6 years ago. Some of it I bought, 6 months ago, yesterday or today. So keep that in mind. I did add Nvda to this position, to this account, right? I've said this before. I don't have Nvda as a stock, like just a pure holding in my portfolio. I've viewed it just as like a little bit too uncertain. It's doing a fantastic job. I'm very glad that they're doing well. I have exposure through the ETFs. It's the largest weighting in the QQQM and in VOO. But I haven't had it as a pure play because I like Amazon and Google, just because I think that if chips slow down, like if the major spenders slow down their growth or their CapEx spend, their growth in CapEx spend, these companies will actually be benefited because they'll be printing free cash flow then. But I did add a star position. They 25x their dividend. So it's not just a penny anymore. It's 0.5%, which isn't crazy or anything like that. But I thought that this would be a good portfolio to add it in. And they continue to show great numbers. It is a very small portion of my portfolio because, like I said, I put in $200 a week. That's all I do in that portfolio. If you want to see that portfolio, let me know by telling me it down below in the comment section. But yeah, I will continue to add to that position along with some of the other positions I really like MasterCard, Meta, at these prices. So let me know your thoughts. I really do appreciate it. I think just in general, AI is looking great. The companies are still doing very well. The market just doesn't really trust it. It's a little bit cautious. We do have maybe some Iran news coming up in the next week, so be on the lookout for that. Trump does crazy things on Friday. There's usually big announcements going into the weekend after the market's closed. So be on the lookout for that. Also be on the lookout for some more earnings reports next month. And some people say sell in May and go away, but the fact is the market's actually done quite well so far this month. So we'll see how that goes. Let me know your thoughts. Thank you so much. I appreciate it. I'll see y'all soon. Bye. Just a reminder, this is not financial advice. This is not legal advice. Do your own research. I'm never going to reach out to you either in the comment section or through any other means to try to get you to invest in something that I'm investing in or to send me crypto. Some links underneath the video are affiliate links. I may earn a commission, but this is at no extra cost to you. Of course, do your own due diligence.